Happy Easter everyone, Dougie Chong here. Welcome to today's episode where I'll be reviewing Cineplex Stock. I'll start the video off by giving a brief overview of the business model of Cineplex. For those of you that don't know what Cineplex is, they're basically a big movie theater chain here in Canada. And you'd be forgiven if you thought that most of the profits of a movie theater were from selling tickets. It's actually from selling the concessions such as popcorn and drinks for outrageously marked up prices. The tickets are just to get you to the theater. I'll also mention that this video is a viewer request. I think it was actually requested about 2 different times. So if you have a stock that you want me to review, just leave it in the comments below. I don't guarantee that I'll make a video on it, but I'll try my best. And all I ask for in return is if you can hit that like button and hit that subscribe button if you have not already. Alright, so now I'll get into my personal experience with Cineplex, the company. I mentioned in this channel that it's important to understand the business models of the companies you're invested in. If you are a customer of the company you're invested in, it's even better. Growing up in Canada, when it came to watching movies, you almost always went to Cineplex. There were a few other options like Rainbow Cinemas and a few local theaters, but almost always you would go to the local Cineplex. There used to be a few other options like Famous Players and Galaxy Cinemas, but I'm pretty sure Cineplex kind of gobbled them all up and became one dominant player. It's very important when investing in a company to either be the market leader or have a considerable market share. And Cineplex certainly has that in the Canadian market, but is that important if the industry is not going forward? Alright, so let's get into the actual experience of going to the theater. You're there. Technology has actually improved theaters in a few different ways, one of which is the most annoying part of going to the theater. You go and you'd have to stand in line. Maybe the movie you want to see is sold out. Now you can buy online or you can buy from kiosks. You still have to line up to get your popcorn, but hey, nothing's perfect. No one's a fan of the sticky floors, but the chairs are pretty comfy and you get to watch a Hollywood movie on a gigantic screen, all for the price of about $15. I think movie theaters are a great place to take your kids. I know as a child, I loved going to the movie theater, watching movies like Harry Potter and Fantastic Four. It's all part of the childhood experience. People also say it's a great place for dates. I don't think it's the best because you can't really talk, but maybe dinner and a movie is a good date idea. But personally, I haven't gone to the movie theater all that much in recent times. I think the last movie I saw was the big Avengers movie. And it's not just me that's not going to the movies, it's a trend going across Canada where a lot more Canadians are opting to stay in and watch Netflix rather than go to the movie theater. Alright, now I'll get into the technical analysis portion of this video. I'll start by showing a 1-year graph of the Cineplex stock. Currently, it trades for around $13, when about a year ago, it was trading for about $24. This marks about a 50% drop in the price of the stock. This drop is definitely expected since all revenues pretty much stopped for the indefinite future. But then looking at the 6-month chart around December 16th, there's an interesting jump where the stock goes from about $24 to as high as $36. This represents a 50% increase. The cause of this increase was that Cineworld announced that they were gonna buy Cineplex stock for around $32. I mean Cineplex as in the whole company, they're gonna buy them straight out. Cineworld is a movie chain based in UK and they were doing very well with an all-you-can-watch subscriber service. And so they decided to buy Cineplex and try that same model here in Canada. Speaking of all-you-can-watch movies, a very interesting startup to look at is a startup called MoviePass. They are now bankrupt, but what they did, they offered all-you-can-watch movies for a subscription price per month, and all they would do is buy the tickets from the theater when you wanted them. It's a very interesting case and studied by a lot of business classes because initially the price was too high. I think it was like $50 a month and no one was buying it. Or maybe it was $30, but still no one was buying it at that high price. But then they lowered the price to about $10 per month, which means if you just saw one movie per month, you would make your money's worth. This caused their growth numbers to soar exponentially, but obviously the company lost a lot of money. The CEO is heralded as a growth hacker and is now very successful, even though the company is ultimately bankrupt. It remains to be seen whether a subscription service would work here in Canada, but I'm not very hopeful based on that story of MoviePass. Alright, going back to the price graph, it looks like recently it was as low as about $9 and it soared to about $13 now. In my opinion, this rise was just because it was oversold a bit. People are starting to buy on the dip, but there has been no good fundamental news on the company, so I don't think this price run up is sustainable. And even with this huge price drop, the PE ratio for Cineplex is still 23, which is incredibly high. You can get other great companies such as Air Canada stock, which have a PE ratio of about 3. And we'll just ignore the dividend yield because it's gonna be cut if it has not been cut already. Alright, now let's look into the balance sheet of Cineplex. They have about $197 million in current assets and $455 million in current liabilities. I actually thought they'd be a lot worse off than they are. This balance sheet is not that bad. They don't have all that much cash, but I think that they can get through this crisis with just a few loans. Alright, so in my opinion, is Cineplex stock a buy? Again, this is just my opinion. I am not a licensed financial advisor. This is not legal financial advice. In my opinion, it is not a buy now. That's because even if the balance sheet was amazing, they had cash everywhere, the revenue was high, which it's not. It's an okay balance sheet, but it's not amazing. And even if the price was at rock bottom, 52-week, 2-3 year lows, I do not believe in the long-term potential of their business model. I'm just seeing from personal experience and analyzing the trends that more people are subscribing to services like Netflix rather than going to watch movies. But if you believe the all-you-can-watch subscription service will work, or if you think these movie theaters can turn around their business model by changing theaters to things like gaming centers, then by all means, it might be a good buy for you. But let's say I did believe in their business model, I would still not buy the stock because of that recent run up from about $9 to $13. I do not think it's very sustainable, and I would wait for it to fall back to around that $7 level. But again, that's just my opinion. I'd love to hear what you guys think about it in the comments below. That's it for this video, guys. Thanks a lot for watching. Hope you learned a lot about Cineplex stock. Please leave a like if this video helped you at all and subscribe if you have not already. Enjoy the rest of your long weekend and see you in the next video.